In today's video, I'll be giving you 3 ideas that I have on USD crosses for the day and rest of the week ahead. First of all, what I want to say is that we are going into a pretty big news event today. We have the Jackson Hole Symposium, and we also had GDP numbers come out better than expected for the US dollar, or for the US, which impacted the US dollar. Now, one thing you'll notice is that this Jackson Hole Symposium, all you need to know about it is it's basically the Fed having a meeting, and that some of that information will leak and potentially be market moving. So the dollar is likely to be pretty volatile. Now, what I would like to show you guys here today is the first pair I want to bring your attention to is actually the EURUSD. And if I look at this thing on the 4-hour chart, you can see this thing has been getting really decimated pretty hard. So when you ask me, well, Nick, what is the move? Is it to buy it as it is hitting a low? The answer, in my opinion, is no. I actually think that the euro is more of a sell than a buy, and I want to give you guys just a quick idea that I have on this pair. Notice something very specifically. If we can zoom into this number here on the right, notice that it is awfully close to 1.000. In fact, recently we call this level parity, and we recently traded just underneath parity for the first time in a very, very long time. So now as we retest that potential level of parity right around the 1.0000 mark, I think that that level could offer a major level of resistance. So that level right around here, this zone here, is the $1 equals €1 mark. And if we take a look at it on the daily chart, you can see where we're going with this. It's basically this zone of resistance here. Now, as we broke underneath this level, to me now this level looks pretty significant for potential resistance point. So if we pop up into that area, to me, that could be a pretty decent sell trade to continue this higher time frame trend. And again, look at it on the higher time frame. Look at this daily chart. You can see a strong overall downward trend. This is not something personally that I'd be interested in buying for several reasons. But the major highlight reasons is that when it comes to the Federal Reserve versus the ECB, which is the European Central Bank, the Federal Reserve looks much more hawkish and much more capable of raising interest rates, which is a huge driver in the currency market. If you're not already familiar, interest rates are what make are one of the primary reasons that a currency is more or less attractive. A higher interest rate is better for investors, so people are going to buy the one with the higher interest rate very often. So we look at the euro versus the dollar, and we can actually compare notes here. If we go take a look at under the major currency pairs and go look at EURUSD here, take a look at this. We can actually compare interest rates, which is a huge indicator that we use on a regular basis here at A1 Trading. If we take a look at interest rates, the euro versus the US dollar, look at this. So on one hand, we have 0.5% for Europe. And then the current interest rate offered by the US Federal Reserve is 2.5%. Where would you rather park your money? Where you're going to get 2.5% or 0.5% per year? Probably the 2.5, right? That's an obvious question. So just simply knowing that, that's part of the reason that we have a positive reading for the dollar and a negative reading for the euro in this category. So if we go over on the score chart summary, we've taken this specific one, interest rate, and given a -1 score, meaning sell the euro and buy the dollar. So this has a -5. So the euro dollar looks like a potential sell. It has a nice forecast to the downside, which we're looking to potentially capitalize on. And so now back to the technical chart here for a second. The idea for me would be probably a retest of this 4-hour chart. If we do actually end up getting a retest of this zone here, you could probably get away with some pretty decent risk reward just looking to sell at parity. So I do like the EURUSD short, especially if we swing up into that area in the next 24 hours or so. That could be a decent sell trade in my opinion for more downside continuation on this higher time frame trend. So again, we get a -5 score overall in several categories. Feel free to pause the video and take a look at the Edge Finder for yourself if you'd like to see all the different features. And remember that if you would like to get a copy of this for yourself, there will be a link in the description down below and a promo code that will get a huge discount for subscribers here on YouTube off of the product. So anyways, yeah, so this -5 is broken down to the COT reports, which favor selling the euro, buying the dollar. Retail sentiment, the crowd is buying the euro, which I think is very interesting. So the crowd is long on EURUSD. And then if you take a look at the trend, very clearly downward trend, which gives us a -2 in that category. And the only fundamental category that is bullish for the euro is the GDP growth, which has outpaced the US in recent times. But again, that is one of the 4 that we look at. Inflation, higher inflation in Europe, interest rates, higher interest rates in the US, which is good. Unemployment, lower unemployment in the US, which is good, right? So comparing all those things, the euro dollar comes out to be a pretty nice sell trade, in my opinion, on a retest. So that's how I'm approaching that. Next up, we're going to take a look at another currency pair that I'd like to show you guys, which is GBPUSD. Very similar idea here, still short biased. And if I take a look at the Edge Finder again and we switch over to the pound dollar, remember with the Edge Finder, you can look at any pair you'd like. We have so many different ones added to this list now. We've really come a long way with the tool, and you can select all of your favorite markets to take a look at. Anyways, we're looking now at what we'll take a look at is the pound against the US dollar, which gets a strong sell. Now, under the strong sell breakdown of the score chart summary, what we can see is that the commitment of traders, this actually gets a even stronger reading than the euro dollar. And if we take a look piece by piece, everything on here is indicating a bearish reading on the pound against the US dollar, except for GDP growth. That's the only place where the UK slightly outpaces the US right now. So all of those things considered, the pound dollar, we have a short bias on this one as well. When you guys see trades that I take on my channel, 100% of the time, I am using this tool to help me find the trades that I want to take, and then I'm using my technical analysis to actually go place positions on the market. So now we take a look at this, we say, well, where is the trade setup or setups? Maybe there's more than one here. First, we'll take a look at the 1 hour chart. And if you're aggressive, maybe you're just looking for this area here to hold on a retest here intraday. So for example, something like this. If you're just aggressive and you think that the pound USD is just going to continue to roll over, you know, if you're fairly aggressive, this might still be a decently worthwhile risk for you, depending on your style of trading. Now again, stop loss level here, above market structure, but that gives us room to potentially, if we do end up retesting this consolidation, still stay in the trade if it does decide to roll over there. But that gives us 2 barriers to the stop loss, which is how I like to do it. I like to, if I can, put more barriers, market structure in my favor to hold a trade in case this level doesn't hold perfectly. That gives me 2 levels to sort of hold that resistance, if that makes sense. So anyways, targets here, or where I think that this thing could go, starting point would be a move back down to the previous low, right around 1.1728. That's that previous low there. But then perhaps even if we scroll out further, if we look at the daily chart, we have this potential, which would be quite a move away, but it's still within the realm of possibility. So this level here is the daily low from 2020. And it's possible that if this thing does start to crash through the lows yet again, that the daily chart could take us there. We could see something like this, where we take out those lows and start moving our way back down to that 2020 low, which risk reward wise, that would be like a trade of the year kind of thing, right? If you took this trade here and you were able to get a 6-to-1, I mean, that would be an incredible trade. So of course you have options, you have different ways of playing it, but for me as a swing trader, what I'd probably be looking to do is just take something like this, or potentially another level of interest would be a level up here. Both of those look like reasonable trade ideas. So if I was to take this trade and it didn't work out, perhaps I try again at a level like this, right? So maybe it swings up here, doesn't work out, and then maybe I get that second trade and this one does work out, right? So I'll often do this when I take trades, I set them up for, you know, alternative solutions. So even if this first trade doesn't work out, I'm going to risk really small so that if I need to take more trades, it's no problem. It's not going to damage the account. That's the whole idea behind that style of trading. So that's going to be your second pair. And finally, I'd like to show you guys gold. So gold, for those of you guys who trade it, has been really beaten down in the last several months. You can see here's a daily chart where we've put in pretty consistent lower highs. And, you know, I made a point recently that I've actually been picking up gold for a longer term position on the long side, which definitely looks sketchy. But for me, what I've basically done is long term, I've bought gold basically off of this level here, with the idea being I think we have that potential to longer term return to the highs and perhaps even beyond. The reason I say that is, as I always mention with gold, if you scroll out long enough, gold over the long periods of time tends to rise, right? Not always, not guaranteed in the short term, but over the very long term, it does tend to rise. So I'm willing to start picking up a gold position for the super long term. Anyways, for the shorter term traders out there, this thing looks like it is structurally bearish and perhaps headed back down to the previous swing low here. So if that level does get retested, how could we look to re-enter this? Well, I talked about this on my stream here this morning, and I talked about this level here. So let's see if we can draw that in as supply. So what we saw here is that we just had a bit of a breakout here to the downside off this trend line, and now we're retesting this area. So it looks like this idea that we called out on the stream here this morning did come into play. We talked about putting stops here with the idea of potentially similar to how we just talked about with pound dollar, setting up multiple scenarios, right? If we were to talk about two different scenarios where one, you take, you know, a super sort of more of a swing trade approach, right? A swing back down to the previous lows, that could give you a pretty incredible 7-to-1 risk reward. But then you have a more mild idea here where we say, okay, well, we have stops above structure. So somewhere in this area, and if it's able to roll over, a reasonable area of target could be a move back down to levels like, let's see if I can mark this up, 1730, and also areas like this one at 1744. So it just depends how you play your trades. You know, maybe you're the type of person who takes partials. So if you take partials and you say, okay, I'll take half my trade off here, let the other half run here, or maybe you just let a third half run, right? Just depends how you like to trade. For me, I like to trail stops. So for example, I took this trade, let's say, if it comes down here, I'll take my stop loss to break even. If it were to drop further down into this area, I'd be trailing my stop behind market structure, and so on and so forth, right? Until I get inevitably closed out. I talk about that often. That's how I like to trail stops, but that's just my style of trading. I understand that many of you guys have different styles than myself, and mine is not by any means the best of the best or anything like that. It's just what works for me, and I encourage everyone to do what works best for them. I hope this video was helpful to you. If you would like to get access to the Edge Finder, which is how I find a lot of my trading setups, it's our market scanner. If this would be helpful to you to use in your own trading, here's how you can get a copy. There'll be a link down below in the description. Punch in that promo code at checkout and you'll get a huge discount. And if you have any questions, you can feel free to send a message to one of our team members who is standing by. Their link will be down below in the pinned comment in the comment section. Thanks for watching. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.